Welcome back, guys, to another video. Today we are going to talk about fractal break-and structure. Fractal break-and structure is an understanding that will blow your mind. It will give you precision and a clear logic that makes complete sense. When we're looking at break-of structure in general, a lot of people look at the higher time frame. So, for example, if I take the 1 hour time frame and I observe a trend such as the one that we are observing right here, when the market is going up and then the market is going down. There are many variations of way. Many people that do not understand the concept I will present in this video, they will say, oh, there is a break of structure. For example, here, that could be identified as a break of structure, right? Also, here could be identified as a break of structure. That means the market creates a high and the market breaks above this high, it comes lower, provides you the opportunity to buy lower, and the continuation. But then in that continuation, the market also broke these highs. The market went above, it came lower, and then it gave you the opportunity to buy lower or at the price so that you can trade the continuation. Vice versa on the opposite side. So this is not what I want to show you. I want to show you a fractal perspective of structure. Okay? So to best illustrate what I would like to exchange with you, I'm going to show you a different approach to break of structure on 1 hour time frame, the 15-minute time frame, and the 5-minute time frame, and if I'm fast enough, maybe the 1-minute time frame. The best way to identify structure or to understand the logic behind structure, you have to start with the understanding of two candles. Why two candles? Because two candles was the first two candles that was ever printed in the market. That means the high and the low of the previous candle was the key levels. And then when the next candle closed, it either closed above or below or in between that previous candle high or low. Therefore, whenever one of those highs or low or that range is broken, then that's a break of structure. That break of structure is going to define a bias, and that bias is going to define a location. That location is going to define where you are going to execute a trade to trade in the direction of the break of structure. Now, with the logic I'm explaining right now, which is a fractal perspective, you only have to look at the last bearish candle before an up candle, a bullish candle, and then when the market decides to break the low of the bearish candle, such as here, then that's your first break of structure. That break of structure confirms that this is the last bearish candle that holds the price above here. The market breaks below. You have two ways you can approach that. When the market goes above, if you find an edge above, you can sell above. You can use fractal support and resistance by identifying the low of this candle as a fractal support. Fractal support that was broken by this candle. Again, the concept of two candles. When the market retests this low, which is now a resistance, after breaking the fractal support, right, or the fractal structure, then you can sell above the break. If you fail to sell here, when the price is showing you a sign of momentum that is about to break the low of this candle once more to continue in direction of the initial break, you can actually take a breakout trade. So that's two ways. Remember, I said I'm going to show you on the 1 hour time frame and the 15-minute time frame, 5 minutes and 1 minute. So I'm going to show you one more example. Okay, so if you observe carefully, here you have the last bearish candle before the market went up, right? So if we place a line here, like I said, we have two ways we can approach this, right? We can approach this as a breakout, or we can approach this if the price gave us an opportunity to go above. As we can see, the market did not return above. So in this scenario, the best entry technique would have been the breakout. That means the market is here, the 1 hour candle opens here, and then it starts to go up and down between this price, and then finally decides to break that price. So right before it breaks that price, you can use this as, okay, I'm going to enter my sell trade in this area, and then you'll be in position, stop loss above, and then you can trade in the direction of the breakout, right? So that is, again, fractal break of structure. Again, here is another example. You have the last bearish candle right here before the market went up, right? So the next candle opened higher, and then while it's about to break, you have two options. You can either take the breakout, put your stop loss above, or you can wait for the market to retest and then sell here. Either way, the market provided three opportunities: the breakout opportunity, the retest opportunity, and the second retest opportunity. And as you can see, that is the fractal of break of structure. So if you remember in the beginning of the video, I showed you a completely different approach, which is the approach that is mainstream, the approach that people are observant that are using, and sometimes they are still confused about it. But that is the best way to trade with the trend at all times. Because if you are able to identify the last candle, the last bearish candle before the market go up, while you're trying to trade in the direction of a downtrend, so you are trying to trade in the direction of a downtrend, all you have to do is identify the last bearish candle before the market basically creates a bullish candle, wait for that bullish candle to either getting broken, sell the breakout, or wait for the retest right here, and then you can get your sell trade. So that is basically the fractal understanding of what I showed you earlier on. So here is another example. You have this low right here, but you see it's a big candle, right? So for instance, if you do this here, then that is where you have to adapt. When they have a lot of wicks like this, then you're going to place your candle, your line here as a guide, but then you're also going to identify the previous lows to give you a better edge if you want to use a breakout entry. Because again, all these lows here before this market is going against the trend allows you to identify a potential area so that whenever the market decides to break, you can either sell as a breakout, like I said, or wait for the market to return above. And as you can see, it returns above all these levels, and then it allows you to sell above and then trade the continuation. So let's look at the 15-minute time frame for those that prefer smaller time frame, and we're going to use very simple ICT kill zone and pivot point to identify the best times to find the highest volatility. And we're going to do the opposite direction, right? So here the market is in an uptrend. We have the London kill zone, which is here. So in the opposite direction, you want to identify the last bullish candle, right, high, before the market creates a bearish movement or bearish candle. When that area gets about to get broken, you can buy the breakout or wait for the market to pull back and buy here, right? You have another example right above where the market creates a bullish candle before it makes the breakout, so they are going against the trend. So you see, the scenario is when you are in a bullish trend, right? So you want to continue to trade in the direction of the trend because the trend is your friend. So in this scenario, we have a bullish candle high, then followed by a bearish candle. So as soon as basically this bearish candle close, that is when you're going to place your line here. The market, you wait 15 minutes, 15 minutes later, it looks like it's gonna break. You can make two choices. When this candle close, you can either buy here because it's connected to here, or you can buy at the breakout, right? Breakout trading, and then you can see they retest this level many times, because you have this candle also right before this bearish candle, you have this bullish candle right before this bearish candle. So the market is retesting all those levels all at once and providing the continuation, right? So again, here is another example. You have the bullish candle right here before the market creates a bearish candle, right? The market's about to break, you buy the breakout, right? So sometimes they return, sometimes they don't, but I'm showing you two different variations. Let's go quickly on the 5-minute time frame for more precision, because the lower you're going to go on a time frame, the more precise you're going to be. That's the only difference, right? It's like here is the same, right? So we have the bullish candle right here, right, before this bearish candle, right? Bullish candle before this bearish candle. So the high is right here, right? The market opens the next candle right here. They go down a little bit and then they break out. So you can either buy the breakout, put your stop loss lower, or wait for them to break out and expand, retest this area, and you can buy at this area. And that's it. So you can repeat this process, but as you can see, there are many opportunities here, and even in the opposite direction. So if you look at the opposite direction for a short period of time, you have the low of this bullish candle, right, before the market. No, sorry, it has to be a bearish candle in the opposite direction. So we have this bearish candle low right here. Okay, so the bearish candle low right here, and then the market does that, it goes up, right? When that candle that low gets broken, right, the market goes above. You can sell above or sell at. The market comes back here, you sell at or you sell above, stop loss above, and you can see you have the opportunity to get a nice rush to the downside. And that's it. That's the fractal, that's the enigma. Okay, so hopefully this understanding is going to help you be more accurate and more precise and be and win more trades. Okay, this is the 1-minute time frame, and then I'll be done. Here is a perfect example. We have this last bullish candle before the market goes down. The market breaks. You can either buy the breakout, put your stop loss lower, or you can wait for the market to pull back lower so that you can buy below or at when they're about to break out again. Okay, so that's this logic. Okay, let's look at the opposite direction quickly. So we have the last bearish candle, which is the low here, right, before the market goes up, right? Look at the market going up here, For instance, you see it goes up here, the market breaks, you either sell the breakout, wait for the market to retest. They retest twice, they provide free entry opportunities, and then you have a short-term down movement, right? So this is, to me, this is a game changer because it allows you to actually identify quickly a fractal breakup structure, which will allow you to get the best prices if you can align that with time and price and a higher time frame perspective, right? Thanks for watching. Drop a like, subscribe, and let me know in the comment section if you backtested and what do you think about the backtest.